Hello, chart watchers and Decision Point faithful. Welcome to this Monday, November 16th, 2020 Decision Point show. I am here with my father, Carl Swenlin, and I am Erin Swenlin. It's our job to help prepare you for the week ahead, and we will get right on to that. How are you doing, Dad?
Good. Noticing our nice sunshiny 80-degree weather here.
I know.
And, and our producer, Eric, says it's raining up there. So,
Really? It's raining in Seattle?
yeah.
I know my producer is out there laughing right now. Okay, November 16th, our agenda. So let's take a look at what we're going to go over. Lots to look at. Of course, we're going to discuss our decision point indicators, what the SPY is currently doing, and our thoughts there. We want to talk a little bit more about climaxes. And Dad, you did an excellent article on this. Was it last week or the week before?
It was last week. I think it was a Thursday.
On Thursday of last week. So highly recommend our viewers, if you have not read his Decision Point blog article, you can find that on our website. Just go into the blogs and links page, and if you scroll down, you'll see his article right there. But we're going to talk about climaxes here. Gold and gold miners. I had a lot of questions this morning in the Decision Point trading room, which I do invite everybody to come to. So we'll definitely cover the gold and gold miners. Energy sector, obviously this is a sector that is finally awake, and we want to take a look under the hood with our sector chart from our sector chart list on our website as well. Carl's going to talk a little bit about a possible forecast going into 2021. Of course, it's the end of the year, so this is that time we're all being pegged and pinged for our thoughts on what's going to happen next year. And so we'll give you a taste of that with what my dad's thinking about it. And then, of course, I'll finish with the diamond of the week. I covered it in my Chart Watchers article on Saturday morning and didn't do so well today, but I think we need to look at it again anyway. So I will be presenting it as well at the end of the program. All right, so let's get it started. As I said, I do a free trading room live on Mondays at noon Eastern. All you have to do is go to our website, sign up on the free email list that we have, our free newsletter, and you will get all the information on how to register. It's a recurring trading room, so once you register once, you're going to always be notified about an hour beforehand on Mondays that it is on its way to being started. And then I also have those recordings available as well. If you don't follow me on Twitter yet, @_DecisionPoint, because I also put links in my Twitter feed as well. All right, Decision Point scoreboards. We didn't have any changes this past week, amazingly. Seems like we were getting them constantly, but really it was a matter of changing a bunch of neutral and sell signals into buy signals. And so at this point, of course, all of our scoreboards look very green. I talk about this, I think, every week, but we do have that long-term PMO sell signal still on the Dow. You can get this signal by looking at the PMO on the monthly chart. And so the monthly PMO has not had a positive crossover. Consequently, we have a long-term sell signal still intact on the Dow.
And
our sector scoreboards, we had a little bit of a shakeup.
Just to let people know, we don't change those signals until the end of the month, even though there is a crossover, because we don't know what it's going to be at the end of the month.
Correct, absolutely. And this is similar for our weekly PMO. When we get those crossovers, they don't become official. We don't book them until the actual end of trading on the final day of the month for the monthly charts and on the final day of the week for the weekly charts. So we will look at some of these, but you have to keep in mind that sometimes those are going to change on those charts. Speaking of charts, I did talk a little bit here about this sector scoreboard, but we really didn't have too many changes. I know we ended up with XLF moved out of a long-term trend model sell signal last week, and I know XLRE, I think it was the intermediate term trend model signal that we moved to a buy. That's intermediate term trend model buys are based on what we like to call silver crosses, where the 20-day EMA is above the 50-day EMA. So that's how you end up with these intermediate term buy signals. Long-term trend model signals are based on a golden cross 50-day EMA crossing above the 200-day EMA. So that's why these are on buy signals. And of course, energy is still on a long-term trend model sell signal because the 50-day EMA, even though we've had a really great rally, is still below the 200-day. All right. Let us do exactly that and look at some charts. All right, so I figured we would start, and feel free to break in, Dad, anytime. But we always start off with the 5-month candlestick chart, and this is of the SPY. And you can see we've been in a nice steeply rising trend that hasn't really been compromised just yet. I noticed that we had a move. I believe we closed at all-time highs, if I'm correct about that. But we didn't set any new intraday highs at this point.
Yeah,
PMO still looks
that rising trend line that we drew in just before the show. That's really a second line, because notice that going into the beginning of last week, much steeper, going up to the black thing. Yeah. So this is basically easing off somewhat of the steepness, which can't be maintained. But even still, it's still pretty steep.
Yes. Yeah, absolutely. Similar to this rising bottoms trend line, but that didn't, that ended up accelerating anyway. So this time we ended up with the steeper accelerated move, and now we've moved down, decelerated somewhat to get this rising trend. We do see that the PMO is rising and it's on a buy signal. Doesn't look like it's going to be compromised just yet. Carl and I were talking before the program about the total volume that we saw today, above average for certain. And then the other thing I would like to note is the VIX. So we do invert our VIX just so that we can have oversold or high readings on the bottom, and the lower readings are overbought at the top. So currently what I would note is that we are seeing this VIX staying above its moving average. That gives you a bullish bias in the very, very short term. We are still seeing it rising on this inverted scale. So we're seeing very low numbers now on the VIX. And, I'm always happy to see it above the moving average. That definitely, you can see back here that usually signifies some internal strength, and you can see that that's how it worked out over here. But the minute you start getting below that moving average and you can't stay above it, that's when things are a little more dicey. So as long as we have the VIX hanging out here, if you will, above the moving average, I think that that's still very positive in the very short term. So we were talking about these climactic moves, and I'm going to bring up our climactic chart, our short-term climactic indicators, and they're pretty straightforward. I mean, we're looking at new highs and new lows. We look at the net advanced declines and the advanced decline volume. And of course, total volume also helps us determine whether we've had a climactic move, if you will. So in the case of today, you can see we are still seeing these climactic moves to the positive side on the breadth that we have. Friday, we had the same occurrence, and it came off of some negative readings, on the downside. And it didn't come along with a lot of volume on Friday, but my sense was that given this pop in new highs, given the pop on the net advanced declines, that it was looking like an initiation, because we paused our trend. It really wasn't rising that much, certainly before we got that reading on Friday. And today, now we're seeing the same thing. So the question becomes, and Dad, you and I were talking about this before the program, as to what kind of a climactic move this might be.
Right. And it is kind of questionable, just what it might be.
Mhm.
Like needs a little thought. But I wanted to point out, you notice that the new highs uh, contracted over what they were about a week ago. And just so you know, these are calculated on intraday pricing. So you notice on that black candle up there, that was an intraday all-time high. And so you got a lot of new highs registered on that move. But this today, we didn't exceed that all-time high a week ago. So that's why we're still below it. So
Mhm. Right. And trying to determine the climactic, what this climactic move means. So again, I think we're going to still have to think about this after the program before we write our decision point alert. But just at first glance, we have, it's granted a very short term rising trend, but nonetheless, we had a rising trend going into today. We have these climactic readings. In terms of net advanced declines, we had a little bit of a decline on them. As you noted, a lot of contraction on new highs. And then, of course, today we actually got a lot in the way of total volume. And then and I'll explain what I'm thinking, but I want to show the volume ratio chart. We look to see if we get readings above 9. Dad, you wrote an excellent article on these as well. This you included in that climactic article of last week.
right, up down volume ratio. Um, and Marty Zweig in his book, Winning on Wall Street, that was written in a different era. And he took these 9, above 9 readings as meaning having some long-term um, effect, implications. I'm not sure that level is still valid, or maybe I should lower the threshold more. But for now, we'll look at it that way. But this two nines back to back, above 9, let's put it that way, could have some very bullish implications, at least for a couple of weeks.
Certainly. So, to me, I see this climactic reading today. Here's the one we had on Friday, but, it pulled way back. So, I think we could read it either way as far as, an initiation, maybe a continuation, if you will, of the initiation readings we got on Friday. I have to say I would be a little bit, I could see going exhaustion here though, as well, based on that. So we'll have to look at how the rest of the indicators work out. I don't know that these are updated. Yeah, they have been updated. We're still seeing the STOs rising, so I might lean toward a continuation of this upside initiation. But again, I want to see all of these readings come in. I want to see how overbought we're going to be. I want to see if we still have that, a declining trend on some of these indicators. So we'll have to see what it shapes up to be. But, at this point, my sense is that we're probably going to see possibly some higher prices at this point. But that's right now, just what I'm thinking. Whether I still think that at the end of the day, our DP alert readers will know when we write that tonight. All right, so I think we can move to, do we want to talk about gold, or did you want to?
One other thing on the climaxing, even if we determined it was the next exhaustion climax, upside exhaustion, that doesn't mean that the move is over. We could just get some more churning around,
Right.
But it's like on that black candle, if you had jumped in there, maybe it wouldn't have been such a great idea.
Right, exactly. It really, that one lined up so beautifully as an exhaustion. That one was actually pretty easy to call, I have to say. All right, so let's move on to gold. And this is up to date, right? The premium discount isn't, but that's not a surprise. I think it'll still be a discount more than likely. All right, so gold. Um, Gold has been mainly moving sideways. Let's face it, it's been in this trading range, popped out for a little bit, but went back down. I don't like that it's been struggling with that 20 and 50-day EMA. But overall, I still think that this falling wedge is still valid. You have some support here that it held last time we came down and tested that. I guess that was, I think, Friday of last week, Monday of this last week. But in any case, I think the falling wedge is still a valid pattern. We're holding this support level right here, but we still have the 200-day EMA down here as well. So I suspect that we're going to continue to move mostly sideways. I mean, that the PMO is flat because we're
You
just
have a
getting
gold, a GLD chart on there, don't you?
sure,
Let me look at that.
which is right there.
This is what I'm favoring at this
Mhm.
point is a trading range. Um, and, you know, the top of it, we could probably put another horizontal line in there, you know, to match the, you know, the most recent month's worth of trading. But
Mhm.
it seems to be settling out and moving sideways at this point.
Yep. And if we can't see prices getting above these EMAs, that's, you know, to me, it's just, it means we're going to have more churn, more sideways movement. But the RSI is starting to finally get up toward positive territory. We're not quite there yet, but really what that's telling us is that, you know, we've been in this price range. And so over the past 2 weeks, we're kind of right in the middle of it is what that's telling me. So we're not, you know, it's really mostly neutral. Even if we move up there, it's just we've been staying down here. And so that price range of the last 2 weeks, it's catching up. All right. And then GDX. Gold miners, here we go. And like I said, I had a lot of questions about this this morning in the free trading room for DecisionPoint. And, you know, I think it's a similar situation to what we were just looking at, is a sideways range that gold miners have been in. I'm struggling looking at this. I don't like that price has been unable to get back above that 20 and 50-day EMA. It's holding as pretty stiff overhead resistance right now, and the declining trend is still there. The good news, that 200-day EMA, it's holding price up for now. And I think that's still a good thing. We are in a sell signal. We're starting to see a little improvement under the hood. You know, you can see some of the members. This is from Friday. You can see we're getting more members participating here with their price above the 20 and 50-day EMAs. And of course, when you have 100% of the index components with their 50 above the 200, that gives you a bullish bias really on all of those charts. So, you know, I think the bias is still here to the is bullish here for gold miners, but you know, it's going to have to deal with the wind of gold, which isn't doing much of anything for it. And if gold continues to flounder, I suspect we're going to see the gold miners continue to flounder somewhat. But I don't know about you. I'm not looking for a huge decline here. I think that support level probably will hold.
Right now, I look at those two bottoms. I've got one at the end of October and then the most recent in here in November. And that I'll be watching that second bottom to see if it holds. And maybe that'll be a launch pad. But
Right,
you know,
right. Because
incidentally, it's worth saying, you know, anything, no one should take anything that we say as a recommendation to do anything.
absolutely. I read that disclaimer before I begin every trading room,
Yeah.
because when we do talk, you and I, and especially when I'm looking at a chart, I tend to talk about whether it's a buy or a sell. And, you know, I'm not telling anybody to go out and buy or sell whatever it is I'm looking at. It's just, you know, the nomenclature and what I'm explaining based on the indicators. So, yes. All right, so we took a look at gold miners. Did we were going to do the look forward for the Dow, but I think I mentioned the energy sector. And since we are just looking at gold miners, I'm going to pull up energy and then I'm going to pass it back to you.
Okay.
So let's go to our sector chart list.
Yeah, really has come alive.
It
Almost
truly
getting a
has.
buy signal there too.
Yes. So we have a buy signal that's ready to come in here with that 20 coming up to meet the 50-day EMA. If we get that silver cross, as like we like to call it, it's an intermediate term trend model buy signal. I mean, if you want to look at something and want to worry about anything, I would just say that, price right now is really overbought. This was a pretty swift move to the upside. And then when you look at, the under the hood, if you will, of the membership within the energy sector, and, we're starting to see that positive move. We've got more participating within this move inside of this sector, which is positive. You can see this almost vertical increase right now of components with the 20-day EMA getting, over the 50-day EMA. We're starting to see more silver crosses. So that's also good for energy. But, if you want to, again, I always like to point out those things that you might want to worry about.
That's
Yeah,
good.
it's not all perfect.
That's going to cross tomorrow, by the way. I'm pretty sure,
Yep.
assuming it doesn't reverse heavily downward, but keeping that kind of distance, I think you'll see a crossover on the 2050.
Yeah, that should be no problem. Here's the issue. For me, that's 200-day EMA is coming up. You have, that's been kind of that line in the sand, as I like to call it. When it's made the big breakout, we really need to see it hold above that 200-day EMA. At this point, we're getting ready to test that overhead resistance. This could be that point where you get that pullback from this breakout point. So I would just be prepared for a possible reversal here going into the week. You've got what could be a reverse island. But at the same time, like I said, I don't want to talk two sides of my mouth, but you have to look at that new signal coming in. You could be looking at a breakaway gap and a continuation. So there's a lot of things you could read into here. So on the positive side, really nice 20 and 50-day EMA setup, really nice PMO rising, very nice silver cross index moving quickly to the upside. Not thrilled that the BPI flattened out today, but you've got participation now by those members within the energy sector. So we could certainly see more upside movement here, but there are those things to worry about, being the 200-day EMA as overhead resistance, as well as the RSI starting to get overbought, because that typically is, you can see back here, that's generally where it takes and has a nice big pullback. So I think we're in that range where we might need to see this pull back just a little bit. All right, so that is energy. I'm going to pass it to you for your outlook on the Dow, and I'll start getting my diamond of the week ready.
Okay. Once a year, we're tracked by Timer Digest, and once a year they ask for our forecast for the coming year. And this would be a year that I'm quite frustrated by the task, because this is such a mess. Normally, you look at a rising trend, and when you see a rising trend, I normally assume that it's going to continue until otherwise, and so it's easy to come up with some rational targets, but once it hit here, I would not have expected this, but there you go.
Mm-hmm.
And this year, well, this was the year we were, I'm sorry, this year, we were Timer of the Year along with an 8 or 10 other guys, because everybody was in it early. It started at the beginning of the year and stayed on a buy signal till then. So that's an easy way to go. But right now, I just made an assumption, and it's not really a forecast, but I did make an assumption that it's not going to keep going up to the sky, that it's going to actually, that we're going to see a bear market soon. And I put my targets down in this area. But, right now, until you see a move in that direction, I wouldn't wouldn't count on it. But that I just had to pull something out of where the sun don't shine to put on the forecast, but it's not really a forecast at this point.
Okay.
I had another one I wanted to show.
Keep going.
Chevron was mentioned as having was a good dividend stock, and right now, as of today, it's over 5.5% dividend. Just as incidentally, just at the end of October was down here, and that was almost a 13% dividend. So it's moved quite nicely since then. But looking at it, you wonder, well, do I want to deal with it? So looking at a weekly chart, it's okay. It's going up. We got a double bottom. Yeah, that's looking pretty promising.
Mm-hmm.
And then on the monthly, I'm not so sure, but this is really long term, folks. But I'm looking at a left shoulder, head, and possibly a right shoulder. That's going to take a couple of years to get there. So that's what I would be looking for.
Mm-hmm. Yeah, so you could, we might, there could be some more upside based on the daily and weekly charts to help form that right shoulder. But certainly once it gets to that point at looks like at 100, somewhere in there might be the point to concern yourself.
Yeah, so that was just an example of how I like to look back. I like to look back where are the really long-term levels of support.
Yeah,
And
absolutely.
And you may take it.
All righty, I shall do that. Let me get that ready. And this is going to be a fairly good example of that. All right, so I'm going to open with the diamond of the week. On the left side there is the daily chart. On the right is a 5-minute candlestick. So the Fastly was my choice on Friday, and I can tell you what, it sure looked a lot better than it does today, but I'm not ready to give up on it just yet. I think there's still a lot of good, I think there's some good left here. It's struggling with this area of overhead resistance, so I'm not surprised to see that, but you can see it really had a nice move on Friday above the 20-day EMA. The RSI was not positive on Friday, but it was very close to being. And then, of course, you have the PMO buy signal that was coming in and did come in today. So we just got a PMO buy signal. So I liked this mainly because it came off of this really deep decline, found support on the 200-day EMA. You can see that's what you want it to do. And then we got this double bottom. So to me, a double bottom sitting at the bottom of this chart, I think looks great. So I still like it. We'll have to see if we get if it can come back. This 5-minute candlestick, this is what I use as far as trying to time my entries and exits. And, the entry point was certainly earlier today. I'm going to be watching and waiting to see if we end up with that PMO switching direction, maybe the RSI getting more positive, and that's where I would look for an entry. All right, well, that does it for us, Dad. I can't believe it's already time to go.
Right.
All right, well, everybody, happy trading. Talk to you next week.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.